Welcome back, and joining us for a look at the equity scene is Viv Govender from Rand Swiss Offshore. Thank you so much for your time, Viv. Of course, quite interesting looking at the movements there in those US markets because they were at record highs last week. But now seeming that those markets are sinking into the red. And of course, we know that that rally that we saw last week was fueled by those tech stocks, with most of them coming out with earnings that beat estimates. And I'm wondering if that rally now could be softening a little bit.
I think the market is going to absorb the idea that the Fed might not be cutting as much as been hoped and as early as been hoped. I mean, at the end of last year, basically, we were looking at, virtually a certainty of cuts by May, basically. Now there's still a pretty good chance of it happening, but some of the stuff about assumptions about March have gone down. Some of the ideas about how many cuts are going to be has also gone down. Not because the Fed said there would be this many cuts, but the market was anticipating more. And this has been a trend for the last, say, couple of years. I mean, look back at early 2022, late 2021, and think about when the market was thinking rate cuts are going to start happening, and they would have been by the middle of last year, almost like a very high chance of occurring. And right now we look at the middle of this year as a high chance of occurring as well, like a virtual certainty of occurring. I think the market is, as usual, just running ahead of itself on that front.
All right. Well, let's go into the news that came out of the JSE from the different companies today. DRD Gold posting its interim trading statement. So the miner saying that it expects its bottom line to increase by between 5 and 15%. Of course, we are seeing the benefits of a higher gold price here as well, seeming that gold price is going in the opposite direction than prices of the other commodities. Just lay the table for us on the tailwinds that DRD benefited from.
Yeah, like you did mention, the rand also weakening is also pretty helpful for this. Their costs were, of course, increasing as we are seeing a lot of it happening in South Africa at the moment. But in that end, we do see, like I would say, a 5 to 15% increase in earnings per share. We were looking at earnings per share to be between 65 and 71, compared to 62 for the previous period, comparable period. The gold price is, holding above $2,000 an ounce. And I think, given some of the uncertainty in the world, some of the fears about inflation still remaining out there, as well as the possibility of interest rates being cut, it's not a bad idea to have a little gold in your portfolio. And that's why we do see some of these gold companies bucking the trends for things like platinum, etc.
All right. Well, let's go into property. And Fortress announcing today that all conditions have been met in terms of the conversion of those share classes into one. Viv, would you be keen on this stock as they're embarking on this share consolidation? Do you think that the only way for shareholders at this point is up in terms of getting value from that company?
Yeah, look, I mean, it's been a pretty tough period. Over 5 years, the share price is down, 50%. But over, the last year or so, it's up almost 60%, recovering quite nicely from very low lows. Real estate has been under pressure. High interest rates, obviously very bad for real estate. A lot of, the work from home kind of changes around, COVID, etc., have had, disparate impacts on the real estate across the country. I'm still nervous with real estate at the moment. I do think that there's lots of issues there, lots of possibilities of, defaults on some of these loans books out there because of the high interest rates that obviously would not be planned for. So I'd be nervous about real estate, but like I said, off a low base, the shares recovered quite nicely. And if you are looking for like a bit of bargain hunting, maybe that's a bit over at the moment, but maybe there's a little bit more to go on that, because we basically have just only recovered some of the losses we've seen since COVID. And over the last 5 years, like I said, this thing is still down like 50%.
Yeah. Just the general property market, though, would that be something you'd be keen on? Because they did go on a bit of a run last year and actually outperforming a lot of the sectors on the JSE. Would this be maybe something that's attractive right now, considering also the interest rate trajectory that we could be seeing, or not?
I think, yeah, if you look at interest rates falling, it's obviously a bit of positivity coming through there. But I mean, the issue I have in a lot of property stocks is the fact that, there's no changes happening in terms of demand. The work from home phenomena obviously has changed how people work, how they shop, how they live, which makes a big difference in terms of property prices, which is all about location, as you say. And if you change where you live and where you work, the location obviously is adjusting for that as well.
Yeah. All right. Something interesting that I saw, Viv, before we get to your stock pick is that the PIC actually increased its stake in pharmaceutical company Aspen, where now it holds 20.17% of those shares. Is this a stock that you would be comfortable piling more money into, like the PIC, or not?
Yeah, look, I do think Aspen has some really interesting ideas. The whole pharmaceutical industry has had some really, attractive, movements over the last little while. You've seen the development of new drugs, some of them spurred by COVID. They've seen Aspen does some really interesting things, especially in Asia. So yeah, I think Aspen, if you look at a local portfolio holding, would have to be in your local portfolio.
All right. Well, let's get to your stock pick for today. Viv, what are you putting in your portfolio today?
ASML, you not heard the name, but you've obviously used their products. Basically, this thing has a monopoly almost on high-tech chip machines that make high-tech chips. So if you look at a company like NVIDIA, look at a company like AMD up 100% over the last year, NVIDIA up 200% over the last year, ASML up 37% over the last year. Whereas AMD and NVIDIA may not be guaranteed winners in the AI chip space. People do think NVIDIA is going to be the winner, but AMD is also doing well. The one guaranteed winner is going to be ASML, because these are the guys that make the chips for machines for both companies. And also some of the stuff happening around Taiwan means that people are going to build excess capacity in the US and Europe, etc. Also good for ASML. So AI, those movements, geopolitical movements, very good for this company. And like I said, it has not run anywhere near as much as the chip companies themselves that have run, like I said, 200, 100% over the last year.
All right. Well, thank you so much for your time and for your insights on what has been driving investor sentiment today, Viv. Appreciate it. That was Viv Govender from Rand Swiss Offshore.